Okay. All right. So the easiest way one can know and trade better is by understanding the market. Which simply means you always have to take time to learn more about the market, the different forms of trading, and how to go about them, which will help you. It will enhance your understanding, your knowledge, and your mindset about what about the markets. You see, this morning I was there when I don't know the person. The person just got into my DM and then brought in a new Ponzi scheme. I don't know what kind of Ponzi scheme it may be. I told the person, sorry, I'm a trader. I don't know. The person keep pushing. Oh, this project is nice. I said, my brother, I'll block you. Yeah, I don't waste my time on fucking things. Do you get it? So I'll just block you. The next minute, he saw himself out of my DM. I've blocked him long time. So I told him the first thing that I have to let you understand is I'm a trader. And you see, if you are a trader, you never entertain what we call Ponzi schemes. Every trader who entertains Ponzi schemes simply means that person is not a good trader or that person does not understand trading. Because if you hold the skills, there is no way you push yourself, you by your own self push your hand in someone's mouth for the person to bite it, which is abnormal. It is very crazy. It's not supposed to happen. So your trading is your power. If you really want to have power in your journey, the best and the easiest way for you to understand what you mean by trading is for you to know how to go about it. It's for you to respect your journey as a trader. And once you do that, you'd always stand still, you will always stand strong, you will always stand tall to avoid all kinds of what foolishness that comes along with frustrated people who are always online, find a fucking way to ensure they can eat from the pockets of other hard workers. You get it? You get it? So please, we have to really pay attention to when it comes to trading. Now, this morning, let's talk about trading. You see, over here, Fortunes for us, we understand what we mean by sports trading and also futures trading. And I'm going to take time to elaborate more on these two forms of trading. Now, when it comes to crypto markets, there are different forms of what? Trading. Yes, I'm really prepared for that. So, yes, I've seen. I have my power bank here. Don't worry. When it comes to trading, there are different forms of what? There are different forms of trading. When it comes to trading, there are different forms of trading. Now, when you go to Binance, when you go to Binance, Binance will be able to give you most forms of what trading in the crypto space. Binance will be able to give you most forms of trading in the crypto space. Now, almost all the tradings here, either spots or even P2P or even margin trading or any form of trading at all that you see in the crypto space, there are always what we call smart scammers attached to it. Smart what? Scammers attached to it. So always it is important for you to learn to understand how you can navigate these forms of trading yourself. You see, even on the P2P, there are people who want to find a way to scam other traders. Even on the P2P that you just want to buy USDT, where it is risk-free, no scammer there. Even with that alone, there are sometimes people who want to find ways to take advantage of others. This simply means if you refuse to learn, you pay for your ignorance. That is the reason why I always want to ensure that people would learn about the market to understand. And your key to progress in this crypto industry is knowledge. Do you get it? Your key to progress in this industry, in this crypto industry, is knowledge because this is a very wide space, and as a result of that, a lot of people are always finding ways and means to eat from ignorant people. So, therefore, I've been telling myself I refuse to be ignorant in this crypto market because my least ignorance will bring me to a very high sense of urgency and I'll pay for it. I never want to pay for my ignorance. I never want to pay for that. So I always want to ensure that I'm paying a very due diligence to myself to learn. So when it comes to all these forms of trading, what you need to understand is if you refuse to learn to understand how it goes, one, even whilst you are trading, things may happen that may trigger your influence to make mistakes because you don't understand. And aside you aside your personal influence making you got a lot of mistakes because you lack understanding, other third parties may also find ways and means to eat from your pockets because you are ignorant. Someone following me? I following? I follow. I following? I following? I following? Very good. So now let's look at something here. Let's look at something. So let's go to our Binance. Okay, let's go to our Binance. Let's go to our Binance first. I want us to look at something. See the forms of trading here, and for you to know, Binance follows everything. Binance knows a lot. Binance teach a lot of things, and so far as Binance is teaching those things, it's an opportunity for you. Let me see. So, okay, okay. So now you can see over here in your Binance account. When you come here, this place, it's meant for you to search for a lot of things, learn a lot of things, and then have your freedom in the crypto markets. Okay, it's meant for you to search and learn a lot of things for you to have your freedom in the crypto markets. Now let's look at something. Let's look at something here. So trading. Let's type trading here. Trading. Trading. So just type here and let's see trading. Let's use the last part. I want us to do something. Trading. Okay, let's go here. I want us to good. So over here, you see when you type trading, look at it. When you type trading, once you type trading, you are seeing sports, futures, Web3 wallets, functions. These are common things that you will see in the crypto markets. Sports, futures, Web3 wallets, and then functions. So when it comes to sports, this is what you need to understand. So there is what you call sports trading, as we all know. There is what you call futures trading. Now, these are not the only forms of trading in the crypto markets. But the question is, with this, how do you even go about it? And then with the other forms of trading, how can you handle them? So, you see those? Come here. Let's come again. Type staking. Last time I shared something with you on the platform. The last time I shared something with you on the platform. So type what staking to. You can see staking. Type it. Just type this. Come down here. You see, when you come here, you will see a lot of things here. We have Solana staking, Ethereum staking. Just type on any of this. We have liquid staking governance. We just don't need all these ones. Just come down here. I want you to learn more about trading this morning. Just click here. Let's scroll down. Very good. Now, after scrolling down, when you come here, you're going to see these things. You are going to see Binance loan, sports loan, margin, and futures trading. DeFi protocols. All these are different forms of trading. Binance loan, sports trading, margin and futures trading, and then also DeFi protocol. Now, out of these forms of trading, you may have family, you may be familiar with what sports trading, futures trading, but you may not be too familiar with DeFi and then loan, Binance loan. Now, one of the easiest way you can regret in your futures in your trading journey by playing with this Binance loan, then also DeFi protocols. Binance loan. You see, there are some of us, once immediately we hear of the word loan, then we are so melted down that we always want to go for loan. Yes, but the amazing thing is that there are a lot of people who go for loan and they end up regretting why they went for the loan, because some people they go for loan, they don't know the purpose of the loan. They don't even check out the interest on the loan. They just go for the loan. You see, Sometimes, sometimes I don't know. Like black men, if a black man wants to go for a loan, they don't read the terms and condition. They only care about the money it will be given to them. So they won't read the terms and condition applied. By the time you realize the loan they are giving to you, you have to sacrifice all your family members. You never read the terms and conditions. How will you pay the loan? Are you following? Someone following me this morning? Are you following? Sorry, I'm having a little headache. Okay. Are you following? I don't know. Are you following? Now, what I'm trying to say, I'm just trying to let you know. Oh, let me share my. Is my screen visible? Can you see my screen? All right. So I'm just trying to let you know that trading is very broad, and there are avenues, there are places, there are ways that if care is not taken, an individual can be scammed without your knowledge. And some of the ways, this, for instance, this Binance loan, it's not like you can be scammed because no one is there to scam you there. Just like maybe futures trading, no one is there to scam you. But Binance loan has got a very high rate that the less loan you go for, you can lose all your funds to the loan. The same thing applies to DeFi protocols. And that is the reason why anytime people want to scam traders, you see, these places are where the gurus hide to steal from traders. These are the places the gurus hide to do what? To steal from traders, like DeFi protocols. So inside DeFi protocols, that is where you sense things like staking, farming, and all others in the crypto markets, right? So as we keep learning with time, I'll get back. I will explain all these things to you, DeFi protocols and others to you for you to be aware of them. So this morning, let's talk about sports and then what futures. Let's talk about sports and future. This is what you need most for now. This is what you need most for now because this is where you can make your money with peace of mind. This is where you can make your money with peace of mind. And like I said, crypto is very broad and you have to keep upgrading your knowledge all the time. Whereas you keep focusing on where you can access opportunities to make good profits, right? All right. So now let's talk about sports and futures trading. Sports and futures trading with regards to Royal Kill. So over here, when you talk of sports trading, ideally we already have the ideal knowledge about sports trading. We already have the ideal knowledge about sports trading. And what makes sports trading to be so credible and then also so different from other forms of trading is this. On the spot trading, we all know that the spot trading is just about buying an asset at a lower price and selling it at what? At a higher price. Buying an asset at a lower price and selling it at a higher price. So I'm combining both the spots and then the futures. And I'll go more advanced on the what? On the futures. I'll go more advanced on the futures. So pay attention to this session. So buying low and selling high on the spot market. So using Royal Kill, you always assess the opportunity to buy low and sell high. But what makes it so opportune is what big traders uses. And you know, Royal Q is using two forms of strategies here. The first one is called the martingale, and then the second one is called the grid. The first one is called the martingale strategy, and then the second one is called the grid. So applying martingale strategy, traders can be able to buy low and sell high on the spot market. And at the same time, applying the grid strategy, traders can also buy and then make profits on the spot markets. Now, there are times that prefer to use martingale. There are times it's preferred to use grid. Why do you think Royal Group provided all these two sessions? There are some traders, maybe we've been trading for so long, you don't even have any knowledge about the grid boats. You don't even know how the grid boat function. Even with the martingale alone, we don't even know how 90% or how effective the martingale strategy works. How many times do we apply it? So when it comes to spot trading, the spot trading assesses opportunity for the trader to learn and then also buy cryptocurrencies assets at a lower price and then also make profits on them while the assets rises. Now that is not alone. That is not alone. The reason why this martingale strategy is meant to be there is to ensure that at the end of the day, traders can be able to trade even on the opposite direction of the market to make profit, because any market that rises can also do what? Fall at any time. So when the market is falling, it is believed and it is assumed that so far as a market can rise, a market can fall, the trader can be able to trade on opposite direction of the market. So you see on the sports market too, just like the futures market, you trade on the opposite direction because of what you call dollar cost averaging. Because of what we call what? Dollar cost averaging. Now, when you are applying dollar cost averaging, it just simply means you are trading on two directions of the market. It simply means you know that the trade cannot always rise and it can also fall. So you also want to assess the opportunity of when the asset is falling or dropping in value so that you can be able to trade on the opposite direction of the market. Now, when it comes to grade, you see on grade boats, you go to Royal Kill and you see something. On the grid boats, we have two different strategies on the grid boats. We have the arithmetic strategy and then also geometric strategy. Geometry strategy. Now, these two strategies are meant for the traders to use, especially the grid itself is meant to be used mostly in a sideways market, especially when the market um goes bearish. Okay, goes bearish, the grid bot is very effective. When the market goes bearish, the grid bot is what is very effective by applying either arithmetic or geometric or strategy. Are we learning? Are we learning? Let me know if someone is following. Are we learning? Are we learning? Let me know if someone is following. Are we learning? Very good. Very good. So over here, look at it. Over here in Royal Kill, you see, we have always been saying that Royal Kill did not provide all this information here just by mistake. Do you get it? Royal Kill did not provide all this information here just by mistake. So if a trader wants to trade to make more profits, you must learn how to go on advance. If a trader wants to trade to make more profits, the trader should learn how to go on what? On advance. So let me see. Okay, kindly come up again on the grid. So over here you see on Royal Kill. Let's proceed. I just want to give a gist on the future on the spot, then we proceed to the future. So assuming that if you want to trade, you click on any of these assets. You see, once you click on the trade settings, where is it? Where is my am I sharing my screen? Am I sharing my screen? Because I don't see my okay, let me go back. Okay, so my screen is visible, right? Let's so on Royal Q, very good. Now over here, you see, once you click on create, you are seeing this martingale and then also grid bots. You are seeing martingale and then grid bots. Let's click on grid. I want to explain something small to you. So you see, once you click on grid, they said buy low, sell high automatically for 24 hours. So click on create. Now, once you click on create, you are seeing these two here. These are the two things I'm talking about. We have arithmetic and then geometry. Arithmetic and then what? Geometry. I'll take time. I'll get back to explain how it works to you. Arithmetic and then geometric. Now, these two different strategies or these two different setups are there to ensure that the trader can be able to make more profit. And trust me, in the bear season, these two strategies work very effectively and powerful more than martingale. It's just that the trader needs to know how it works. So with this, we have geometric, we also have what? Arithmetic. So either you go for geometric arithmetic, you need to learn how it works. So you click on more information. It said arithmetic. So each grade has the same price difference, and then with geometric, each grade has the same price difference. So price difference was ratio. So with the arithmetic, that is price difference. Then with the geometric, that is price difference ratio. So I guess as we keep learning, I'll get back. I will explain more to you to know how it does what it works, and it's very simple. You see, those who talk about and Oracle do not provide stop loss. Oracle do not do is if you want to use stop loss, it is real stop loss can be applied in what in grid boats. Real stop loss can be applied in grid boats. So over here you can see stop loss. You can also see take profits. Now, have you understood why I've always been telling you that? It's because you don't know how the bot function. That is the reason why mostly a lot of traders complain. And why didn't Royal provide stop loss? Why didn't Royal do this? Why didn't Royal do that? Who is that? Who is that? Mute your call. So let me see if I can get someone to make him a co-host. So the Resenju is here. Please let's make you a co-host in case someone distracts the lesson. Discipline the person for me. All right. So you see, it's because you don't understand, you don't know how the bot functions. If you know how the bot functions, my dear, you will never complain too much. That's the reason I've always been telling you. If I see people who are in they don't understand how the bot functions. Do you get it? So all these things are already programmed by the bot. Your stop loss, your trigger price, you see stop trigger, stop loss, take profit, everything is here. Everything is here. So now you see why I've always been telling you about you just have just 40% of this of the knowledge about Royal Kill. Even with this 40%, look at the amount of profit you've been making. So tell me, what if you have about 70 to 80% knowledge about Royal Kill? What if you have about 70 to what 80% knowledge about what Royal Kill? Anyway, let's go back. So over here we have both the spot markets and then the futures markets. We have both. Oh, what is my this thing? We have both the spots and then the futures markets, right? And on the spots market, the traders can trade with peace of mind to make what profits. Now let's proceed to the futures. That is why I want to shift more attention to this morning. So let's proceed to futures. So futures trading. Futures trading. Now, one interesting thing about the futures market is that with the futures markets, aside it having the high risk, a futures market also provides substantial profits. Aside the futures market providing high risk, it also provides substantial profits. Which simply means if I want to trade on the futures market, I should learn the values, the process, and then also the terms and how the futures market also works before I can be able to trade on the futures market to make more profits. You get it? So when it comes to futures trading, why use Royal Q to trade on the futures market in the first place? Because of what we call trading strategies. Now, I've always been saying, as a trader, you cannot bypass a strategy to think you are trading. You can't just bypass a strategy to think what you are trading. So that is the reason why it is always important for you to learn and understand trade strategy, different forms of strategies in the crypto markets. And talk alone with Martingale. How do you apply that in your future setup to make what good profits? That one is also another thing on its own. So over here on the futures market, there are a few things I've always been saying you need to know, you need to be familiar with them. So I'll go back and forth, talk about the cross margin and then also isolated. Cross margin and then isolated. Now, for the sake of your sanity, for the sake of your peace of mind, I always love to teach something that you understand to make your personal decision. I don't like making decisions for people. Over here, we have the cross margin, we have the isolated what? Isolated margin on the futures market. But it is always advisable, if you know you can't afford to lose all your funds, please neglect cross margin. If you know you can't afford to lose all your funds, because no one knows and no one ever predicts what we call liquidation, to which I have to talk about it. No one knows and no one's ever predicts what we call liquidation. So if you are the type, cross margin is good, and I personally prefer to go cross margin. But if you are the type, you cannot handle liquidation in excess, go for what? Go for isolated margin. It will really help you. Go for isolated margin. It will really what? Help you. And how do you do that? If you want to trade on the futures market, the first thing that you have to do is to ensure that first you go into the exchange. So where is the exchange? First, go into the exchange. Go back. Let's go back. Now, click on futures here. So below the icons, you can see we have home, we have market, we have trade, we have futures, and then also we have assets. Can you see it? Are you following? If you are following, give me one in the chat. If you are following, give me one in the chat for me to know if you are following. If you are following, give me one in the chat for me to know if you are following. If you are following, give me one in the chat for me to know if you are following. If you are following, give me one in the chat for me to know if you are following. All right. Okay, that is awesome. Okay, so let's proceed. Thank you for following. Let's proceed. So, sorry. All right. So over here, just come here and then click on futures. Click on futures below. After clicking on futures, you can see we have this thing here. We have we have isolated, and then we have the assets being traded here. The easiest thing you can do is to come and search for the name of the asset first. Search for the name of the asset. Search for the name of the asset. So come here. If you want to trade on, let's say, MIM USDT, just click on it and then change your setup to what? Isolated. Change your setup to isolated. If it is on cross 2 and you want to change it to, if it is on isolated, you want to change it to cross. Before you proceed to go into your exchange, your royal queue to set up your trade. Before you proceed to go into your royal queue to set up your trade. So immediately you have this setup, now you can proceed to set up the trade. So the first thing that you have to do before you proceed to set up the trade, or before you activate the trade, is to come into your exchange. In your exchange, make sure you've changed this from cross to isolated. From cross to where? To isolated. Make sure you've changed it from cross to isolated. And then the good thing is that if you are the type you've ever traded on most of the coins in isolated, always they will be in what? Always they will be in isolation. Do you get it? Always they will be in what? Isolation. But if you've not traded those coins before, you have to quickly come into the exchange to turn them off from cross towards isolation or isolated. Is that home? Do you get it? Do you get it? Do you get it? Do you get it? Now, the difference is simple. All right, let's proceed. The difference is simple. Listen, when we talk about cross margin, let me explain the two to you. When we talk about cross margin, now whenever you are using cross margin activates your trade on multiple accounts or it activates your trade on multiple assets. For instance, if you are trading on, let's assume you are trading on Solana XRP. Solana and then what? XRP. If you are using cross margin have what we call shared fund. Okay, shared fund. So if you are using, let's say, $100, $20 each for each of the trade, $20 each. So this is using $20. This is also using $20 to trade. Among these two different trades, if it happens that the trader is using cross margin, anytime the strength or anytime Solana pull out of the market, when I say Solana pull out of the market, it simply means maybe this particular $20 hold used in Solana is getting exhausted. The funds is getting what? Exhausted in the market. So the market will proceed to use part of the $100 that you have. If this $100 gets finished and then still Solana don't have strength, it will still use part of this $20 of your SRP account to do it, to proceed with the trading, to ensure that there is sustainability in the market. To ensure there is sustainability in the market. If it happens that one of the trade gets weak, that is the funds in the trade get exhausted, all the two trades will be liquidated. All the two trades will be liquidated without neglecting just one. So instead of one getting liquidated and leaving the other one, all the two trades will be liquidated automatic. That is the reason I have been saying, if you are the type you don't have the chance to go by that, please use isolated margin. With isolated margin, if it is SRP, and then Solana, each trade is focusing on how it can manage to make profits in the markets. So if it happens SRP gets exhausted, SRP will get liquidated alone. If it happens Solana gets exhausted, that is the funds in Solana get exhausted, Solana will be liquidated alone. Solana will be liquidated alone. That is it. So that is the difference. Now, in the case of margin calls, or in the case of margin, cross margin always buy effective, utilize your funds in the market very, very well. You see, mostly when you use this cross margin, sometimes it's very difficult for you to be liquidated because of how it utilizes your funds in the market. How it utilizes your funds in the market. So mostly when you use cross margin, utilizes your funds in the market because it may follow the pattern by buying consistently, utilizing your capital, managing your capital to ensure that there is always sustainability in the market. Which simply means if you have more funds to sustain your trade, cross margin will be good. It will sustain all your trade, or it will sustain your trade in the market. But in the case of liquidation, it will be another messy part of the journey or story for you. Now, on isolated margin, if you are using isolated margin, when liquidation should happen, or if liquidation happens, just part of the trade, or that is just your ongoing trade, will be liquidated, and your remaining capital will still be in your account. If you understand that, give me one in the chat. If you understand that, give me one in the chat for me to know if you understand. If you understand that, give me one in the chat for me to know if you understand. If you understand that, give me one in the chat for me to know if you understand. If you understand that, give me one in the chat for me to know if you understand. If you understand, give me one in the chat for me to know if you understand what I'm saying. Give me one in the chat for me to know if you understand what I'm saying. So only 5 people understood what I'm talking about. Only 5 people understood what I'm talking about. Or should I assume, if you don't respond, should I assume you understand about, right? If you don't respond, should I assume you understand what I'm talking about? All right, so Docs, can we go over again? All right, so now listen. What we are saying is simple. We have the cross margin and then also the isolated margin. Cross margin, isolated margin. So over here, what I'm saying is, if you want to trade on isolated margin, first come to your exchange. In your exchange, this is isolated margin. Turn it off. This is it. We have cross margin and then isolated margin. Now let's define it based on what the exchange is telling us. Let's define it based on what the exchange is what. So the exchange is saying this. Now, this is what the exchange is saying. So over here, he said cross margin. All cross position under the same margin assets share same assets across margin balance. Listen, across what? Margin balance. In the event of liquidation, your assets full margin balance along with any remaining open position under the assets may be forfeited. May be what? Forfeited. That is the meaning of the cross margin, or that is how the cross margin works. So they said assets, same assets and across margin balance. In the event of liquidation, your asset full margin. So the full margin, that is, if you are using $100 as your margin on all the assets, the full margin will be what will be liquidated. The next thing is that in the event of liquidation, your asset full margin balance along with what anything remaining, any open position, any remaining open position. So if you have any ongoing trade, any remaining positions under the assets may be forfeited. So if there is any ongoing position under the same asset, it may be forfeited. This is simple, right? Must I speak big grammar before you understand this? You understand? You understand this? Let's look at the isolated margin. Let me know if you've understood everything. So on isolated margin, they said the margin assigned to the position is restricted. The margin assigned to the position is what? Is restricted. Is restricted. The margin assigned to the position is what? Is restricted. Do you get margin level? The position is liquidated. However, you can add and remove margin at will under this mode. You can add and remove margin at will at this mode. So on the isolated margin, you can also add margin. That is by buying more margin calls. But on the cross margin, if you set up your margin calls, it can be buying them consistently for you. Just that in the case of liquidation, all your trade may be forfeited. So that is the difference. Do you understand? If you understand, give me a chat for me to know. If you understand what I'm saying, give me one in the chat for me to know. If you understood what I'm saying, give me one in the chat for me to know. If you've understood, give me one in the chat for me to know. If you've understood, give me one in the chat for me to know if you've understood. If you've understood, give me one in the chat for me to know if you've understood. Very good. So always, always, it is important for you to. So always, it is important for you to know this. If you are trading and you think you can't handle all the different circumstances, it's about understanding. So you come here, you get to cross or isolated, and you make your decision, right? You come here, you make your decision on what's on, so what's isolated. Then you. All right. Let me know. Someone is saying the observation. So you can proceed to ask your question in the DM. Now, the next thing that we have to talk about, you see, we said maintenance margin. Maintenance what? Margin. And then margin ratio. Maintenance margin and then margin ratio. Let me see if I can use. Okay. So maintenance margin and then margin what? Margin ratio. Margin ratio. Now, mostly I've ever seen a lot of traders trade and they continue to complain about their trading. They continue to complain about their trading. I don't know, either I'm getting liquidated or not. I don't know, either I'm getting liquidated or not. Will I be liquidated very soon? Now, your confidence in the market, your idea and knowledge about the market will either determine either you are going to be liquidated or not. Now, if I have a trade in the market and even the market is going against me 200%, it is my margin ratio that will determine my liquidation price my margin ratio that will determine either I'm going to be liquidated now or not. Either I'm going to be liquidated now or not. Which simply means I have to learn to understand the margin ratio and how it works. I have to learn to understand the margin ratio and how it works. So over here, in the case of margin ratio, listen, in the case of margin ratio, for you to be able to size and observe what can happen to your liquidation, you need to understand the margin ratio. Now, I said the margin ratio is expressed from 0 to 100%. Ratio simply means is expressed in what percentages. So from 0 to 100%. Now, mostly from 0 to from 1% to 30%, it's given in green. And anytime you have a trade, you observe the trade to see how it goes. It is in green. So if you have 0 to 30%, it is in green. You observe that your trade is in green. Now, from 30 to 80, your trade is still in a safe zone. Though you will see that it is in red, but it is in a safe zone. Once your trade starts to get 80, 90, 100, you have to ensure that either you are adding more funds to your trade or you are closing the trade to avoid total liquidation. To avoid what? Total liquidation. So over here, the margin ratio helps the trader. It builds the trader's confidence to know what is happening to your trade. Do you get it? So if you have a margin ratio of 40%, you don't need to be stressed. You don't need to be worried because you know what is happening in the market. Even if you have margin ratio of 50%, you don't need to be worried. The only time things must be changed is when you observe that the trade has pushed from the maintenance margin of maybe 60, now it's around 80. That is when you need to know that things may not work according to your plans and you have to make different moves and make changes, either by adding more funds. Even with that, sometimes a lot of people begin to panic. And let me tell you, there are sometimes a trade can get to even 90% and still drop back again. A trade can get to 90%, you receive email message that add more funds, and in no time the trade will drop back for you to make your profits. So with maintenance margin, the maintenance margin will give the trader the confidence to observe what is happening in the market for him to know that, okay, if this what is happening to my trade, I can either proceed, wait, add more funds, or quit the trade. You understand? You understand? You understand? Do you understand? Okay, so is one if one is trading two assets and one is in isolated mode while the other is in um cross margin mode. In the case of liquidation of the one in cross mode, will it affect the one in isolated? The answer is no. All right, so the answer is no. So if it happens you are trading on futures, you've opened one trade on cross, you've opened one trade on isolated, the rule sorry the rule on cross affects the trade on cross. So the actual trade in isolated may not be affected, but if there are more exposed funds in your futures account, it may affect it. It may do what? It may affect it. That is it. It may affect it. All right, so my question is, in the observation, I had trade on future which went against on cross, and the trade have gone on for almost 8 months. Invested $400 in the coin. Today I have only $30 in my margin. Could be my former liquidation and cancel trades. I'm not getting it. Today, let me see. I had a trade on futures rates, which went against on cross, and the trade have gone on for almost 8 months. Almost 8 months. Invested 400 in that coin. Today I have only $30 in my margin. Could be my former liquidations and cancel trade. So I also observed that isolated margin liquidates faster than cross margin. Yes, it's very true. It's very true. So with your question, please, I guess you can come again to frame your question so that I can get the clear understanding. So it's true. That's the reason why I said I may prefer to use cross margin, but then on different terms. Isolated margin is true that isolated margin, because the reason why isolated margin liquidates faster than cross margin is simple. It's because with a cross margin, your capital is utilized to sustain your trade. Listen to the difference. The difference is that with a cross margin, your capital is utilized to sustain your trade. And with the isolated margin, it's one part or one way path. It follows on using your capital in the market to ensure you make profits. If it can't control the trade, it gets liquidated and then you go your way. With that, the only easiest thing is that you still have extra funds in your account to do what? To trade. But on cross, if that liquidation should happen, it will wipe away all the money you have in your cross margin. Unless otherwise, you've pushed that fund from futures to what? To funding or spot wallet before you'll be free. If not, you find yourself fumbling and wanting in another situation that you cannot write home about. All right. So, um, uh, okay. So I mean, I could have $30 in my margin, but I invested 400. 400 could be my informal liquidation and past cancellation of trades. Well, it may be. It may be. So in this case, if it happens that that trade has been in the market for the past 8 months, then you were using cross margin. Of course, one thing about cross margin is when you're using cross margin, your trade can also sustain. Like I keep saying, your trade can be sustained long in the market, and that one there is no problem with that. So in the case, you said I have only $30 in my margin, could be my formal liquidation and then cancel trades. So that's it may be that if $30, it could be that your liquidation, then also the cancellation of trades, that is what affected your account. So that is it. All right. Now let's proceed. Proceed and add few things to it. Then we call it a day. So over here on the futures market, now, if you really want to be safe on the futures market, the next thing that I want to address is also the coins you trade. The next thing that I want to address is also the coins you do what you trade. Now on the futures market, I will show you one trade that it has kept long in the market, and I'm very optimistic about it. I've shown you one trade that has kept long in the market, and I'm very optimistic about it. In the futures market, if you really want to trade, if you want to trade in the futures market, there are two forms of assets in the futures market. You see, we have the meme coins, and then also we also have the utility what tokens or coins. Utility tokens. Let me use the actual um right up here so that you can see it clear. We have the utility tokens and then the meme coins. Now, the thing is that meme coins are highly profitable, as we all know. Meme coins are highly profitable, but their nature alone, you should understand that if you are wearing your suit on meme coins, sooner or later, one day at a time, if get taken, you may go empty. You have to sell your suit. That is a fact. If you are wearing very nice suit on meme coins, you should understand that sooner or later, or one day at a time, this may go against you, and you will do what? You have to pay for it. Do you get it? So over here, for instance, meme coins are good, okay, but you need to be very careful trading on meme coins. So instead of trading on meme coins, even though most of the utility tokens, they are not highly profitable. Sometimes they delay a lot. But if they are to give you profit too, so let me tell you this: if you want to trade, there are two ways. secure some of the funds to trade utility tokens, put them on cycle, or hodl them on the futures market for a very long time. For instance, if you are to short a trade, you know something? If you are to short a trade on the futures market, or if you are to long a trade, especially when you know that okay, the market is having the capability of rising on a long-term basis, you can long the trade by going for one of the utility tokens, maybe Solana or Ton or SRP or SEU. Those projects, those assets with strong. For instance, me, Solana, when you're trading on Solana like this, for instance, if you're long on Solana, if they'll give you a liquidation price, let's assume Solana is around um let's say the current price of Solana is 180. Okay. If you are trading on Solana on long, they will give you liquidation price of around $100 or $120. They will give you liquidation price of around $100 or $120. How many of you have observed that? That mostly if you trade on some of these coins, their liquidation price are very far out the meme coins. Have you observed that? How many of you have ever observed that? Have you observed that? Yes. So I'll answer your question on how to know whether a coin is a meme coin. So you see, sometimes if I want to be so safe, after me training on my meme coins to make my consistent profit daily, I have to ensure that I have grabbed some coins on different exchanges using my royal kill to ensure that at the end of the day, those are long-term investment, or I would say long-term expansion that I've done. And I know I'll get a reward. Now, if they are to reward you, they'll reward you with very extensive or intensive profits. And that is the nature of trading on those utility tokens or coins. So if it is let's assume if it is Solana, Ton, there are assets like Ton. I love trading on Ton a lot. I love trading on hot Ton and then Solana. Ton, there is no way Ton will liquidate me. Do you get it? There is no way. And the interesting thing is that I love hedging Ton a lot. I love hedging Ton. So there is no way Ton is going to liquidate me. I can choose to place maybe $20 or $50 or $100 on Ton, go for my 10x to 10x. After going on 10x, at most 15x, I just leave the trade. I go for maybe 10% take profits. Now, this simply means I'm ignoring the coin for a very long time. I'm ignoring the coin for a very long time. This may take, for instance, Ton may give you a good price. Do you get it? Now, assuming as it stands, the price of Ton is around 3.2. Sorry, 3 points. Yes, 3.2. Should Ton rise if you are hodling Ton on futures? Okay, if you hodl Ton on futures around 3.2 and Ton gets to 3.5, do you know the amount of money you are going to make? If Ton gets to 3.5, rise from 3.2, if it's work around to 3.5, do you know the amount of money you are going to make? You will make abnormal money. You will make abnormal money. At least, if nothing at all, you can make double or triple of your capital invested in that amount. Do you understand? Do you understand? Do you understand? Over here, let's open this trade. For instance, this is very good. So on your futures account, anytime you are trading some coins, if you really want to be safe enough, you have to ignore them. If you want to trade on them, you have to also understand that the consequences that comes with it, you will be able to do what? Handle. The consequences that come with it, you will be able to do what? Handle. Hope that is clear. All right, let's proceed. Let's proceed. I guess the network jammed me out of the system. So how do you know either a coin is a meme coin or utility? Simple. It's very simple to identify a meme coin or what or utility token. So over here in your, especially in your CoinMarketCap, who is that person distracting us? I guess I muted this person. All right. Now, so you can go to CoinMarketCap. Or someone say, please share your screen. Please, can you see my screen? Can you see my screen? So over here, you see on CoinMarketCap, let's go to CoinMarketCap. Most of the assets you see here on the first this thing, most of them are strong projects that is having their own this thing. For instance, Ethereum, SRP, BNB, Solana, TRX. You can see all these assets. SEU, you can see all these assets like AVAX, HBAR. You can see them here. Like Ton, where is it? Like what? Like Ton. So this is Ton. Here is Ton. Look at Ton. That is the 21st asset on the coin market cap. This is the current price now. 3.253. 3.253. 3.253. And I know the capacity of Ton and what Ton is capable of doing. I know its capacity and what it's capable of what doing. Now, if you are trading on this asset, you always love it. Because Ton is always the type, look, no matter how it goes, unless maybe you are too greedy, you expose more, maybe leverage. That is when maybe you may think of getting liquidated. But if you apply proper risk to reward ratio, you will always stand firm in the market to make profit. Open margin calls and earn from your odds, from your margin calls. That is it. So you look at this particular trade, for instance, Ton, you are good to go. If you want to identify meme coins, now let's get back here. If you want to identify meme coins, mostly these are what we call what chain coins. And I think whilst we keep learning about technical analysis, I'll get back to explain more about fundamental analysis and then also sentimental analysis. Whilst we keep learning. So over here you can see we have chain coins, and most of these chain coins are what we call them the utility tokens. So you can see we have Ethereum, Tron, Solana, BSC, Arbitrum, Avalanche, Polygon, Base. Let's look at them. SEU. All these Aptos, Gnosis, Bitcoin, Granos, Near and stuff. All these assets are what are chain coins. You get it? Now, beneath or below all these assets, they have their different projects. And those projects are what we call them the tokens. Okay, so for instance, when you come to Ethereum, you may observe some of these tokens here on different what occasions. Observe them. And most of these tokens are what we call, some of them are meme coins, some of them too are staking coins. Their project is used by us for staking. So if you want to know more about meme coins on the coin market cap, so let's use the web. I'll show you where you can identify.
Is the meeting over?
I think we lost him. I guess he's having a bad network.
All right. So I guess the network is quite disturbing. Let me take your questions and then also we bring this session to an end. Well, the network is quite disturbing. So let me take your questions. So please, if you have any question, let me help answer them. If God permits, we may meet in the evening. If God permits, you may meet in the evening. So let me use this opportunity to answer your questions so that I can bring this session to an end. All right, so I'm here, guys. I'm back. I'm back. I guess the network. So Richard Ohine, let me unmute you. I'm not the host yet. So please unmute yourself and ask your question. Richard.
Hello, good morning.
All right, good morning.
Yes, sir. My question is, the other time I suggested, I've been observing the coins very much because liquidation is very, very real. So the other time I was suggesting that if we can have a list of particular coins that we can trade, and I don't know if it will be possible as I suggested, because most of the coins, it's a no-go area. It's a no-go area. Thank you.
All right, you're welcome. All right, so now on the case of coins that may be traded, it's possible, but it may not be applicable to everyone because you have different risk takers. That is one thing that we need to understand. Maybe I have to talk more about that as a different lesson. We have different risk takers. Some prefer to go on meme coins. Okay, some prefer to go on meme coins, and others too prefer to go on utility tokens. So it depends on the risk type of the trader. It depends on the risk type of the odds of the trader. That is it. All right. So can I pause a coin in futures like we pause in sports trading? Yeah. So from my research and then practice, you can pause a coin. You can pause a coin. But before you do that, you have to make sure that you have um you set a good preset price for the coin before you do what you pause it. So you don't just pause it. You have to set a good preset before you pause it. Please, how do you put trades on cycle in futures? If you want to put trade on cycle, just like the normal setup, where is it? If you want to put trade on cycle, just like the normal setup, so let's assume where is it? So for instance, this particular trade, very good. This particular trade, if you want to change it to cycle, you turn it off to what? To cycle. Oh, okay. Since it cannot work, so you can turn it off to what? To cycle, and that is real. But then, like I've always been saying, if you are the type you don't know how to analyze the signals, please don't put your trade on cycle because cycle wouldn't be the best option for you. If you don't know the potential of the coin, don't put it on what? On cycle. If you don't know the potential of the coin, don't put it on cycle because you may find yourself wanting at the end. Just imagine on the futures market, one thing is on the futures market, any signal that is given, it is given based on time, okay, or period. So when that period is over, you may mess up. While that coin is sold, the period is over. The opportunity in that coin is gone. Unless otherwise there is extra opportunity. If not, if you place your this thing on a cycle, you are messing up. All right, so let me see. Okay, let me see if there is any other hand up. Okay, so I guess that's all. So guys, let's end here. If there is no other question to ask, We will end here. Let me see how different and effective is hedging to cycle. Hedging and cycle are not the same. Hedging and cycle are not the same. Now, with hedging, we've explained that with hedging, the trader is sizing opportunity on the opposite direction of the market. With cycle, you are not sizing on the opposite direction of the market, but you are continuing the same process you've repeated. If you are on long and now the market is going on short, it simply means on hedging you are going on short. But if you are on long and the market is closed or the trade is closed and you are on cycle, it will still go on long again. It will still go on long again. Meanwhile, the market is also going on short. Just imagine how you sweat plasma. All right, so I guess that is all. If there is no question, let's bring this session to an end. If God permits, we will still meet in the evening. If God permits, we will still meet in the evening. Okay, so guys, I wish you all the best in your trading journey and keep on learning, keep on growing. Let me see. How can we observe that the 100 USDT on ton? How can we observe that 100 USDT on ton? I don't get your question. How can you observe it? All right. I don't know how you want to observe. Either you are talking about this trade, cannot tell. I don't know. Either you are talking about this particular trade, I cannot tell. I don't know. Either you are talking about this particular trade. Yeah, this particular trade, as you can see, this is the take profit. As you can see, this is the take profit. So I am not here to joke. As you can see, this is a take profit. That should tell you that I'm not so willing to bargain for easy price today or tomorrow. I'm not so willing to bargain for easy price today or tomorrow. As you can see, this is the take profits. That should tell you I'm not so willing to bargain for easy price today nor tomorrow. Hope it's clear. Yes, that is it. So, all right, does it mean if you pause a trade and it gets to liquidation, it will not be liquidated? It will be liquidated. If you pause a trade and it gets liquidated, it will be liquidated very, very well. It will be liquidated. In all things, it only goes in your favor when it's working. It only goes against your favor when it's not working. That is all. All right. Liquidation does not respect any man. That's what you need to know. Okay, so how much leverage did you use? That is 10x. So I guess we'll end here. We'll continue in the evening. Okay, we'll end here. We'll continue in the evening. So go and trade. I guess the signals too are working very fine. But always, my advice to every individual, every trader is learn how to analyze the signals yourself. Learn how to analyze the signals yourself. It is always good to make decisions on your own and then trust your own intuition than to rely on other people, than to rely on others for your success. Learn to be dependent. All right, so let's end here. If God permits, we will still meet in the evening. If God permits, we will still meet in the evening. So I wish you all the best in your trading journey. And like I said, in the afternoon, we may have live session. We may have live session. Today is Thursday, and we may have live session trading. And I think you are free to join. You are welcome. So let's end here. If God permits, we will still meet in the evening. I wish you all the best in your trading journey and have a good day. Love you all. Bye bye bye.
Bye bye bye. Wacha mchezo wewe. Stop joking.
Wala, hii doesn't change.
Haina kama.
Ndio amesema nitahedge kitu kwa juu. So, hizi meeting